All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market's been open here for about an hour, and generally red out there across the board. We see just kind of just kind of this blanket of red, but utilities, healthcare starting to climb on back. Consumer staples. We see pockets of green with some of the high yielding names. Microsoft in the tech space. With a little bit of green here this morning as the market tries to buy back into what was some of the early sell here, at least so far. I'm going to pause here for just a second and make sure we are streaming. I'm getting a note here that there may be a little issue, so let me just double check. All right, looks like we are good to go here. So let's carry on forward. So market's been chopping around and really kind of buying up a little bit of this dip in certain pockets. We saw the market from yesterday at its high 28.95. Kind of overnight low 28.51. About a 45 point dip in terms of the overall market. Now, in terms of challenge positions, both are dipping a little bit. Not exactly what we want to see, but let's go take a look and see what we have to do here with it. Let's see, grab that here. There are no new signals here this morning, so nothing to manage here with that. Both of these are coming to an auto exit date. Procter and Gamble 517 and JD 517. Now the thing with JD is this morning's move is going to take the option and turn it red. We're down $80 on it. So $1.78 is the price on it. So if the option's red by the close today, I am going to have to exit there. With Procter and Gamble, we're still green. We're up about $600 on it since the open. It's going for $375 right here. So there we are with it. Neither of them are at their exit or profit level. So this will come down to this afternoon, and it'd be nice to see JD hold a little bit of a gain and take that green and let us hold it over the weekend. And then I won't complain about finally being able to take off Procter and Gamble and moving on with that. I made the comment when I got into the trade on Procter and Gamble that the data shows that Procter and Gamble is one of the stocks that just doesn't do well. Well, sorry about that. That just doesn't do well as far as getting through two average true ranges. Most of the data for Procter & Gamble over the last several years on bullish signals shows that, yes, it ends with a gain, but it never gets to its profit target. It gets stopped out on time, not on anything else. So I didn't have a big expectation for a big gain. If we were to close it right here today, right now, we have a significantly greater gain than what I overall expected. But still after yesterday, it would be nice to see it, at least push back towards those highs. I do think there's a decent risk that we talk about pinning here with Procter & Gamble at 108 with it being option expiration, but that has nothing to do here with the algorithm. One question came into me this morning asking why I didn't sell Procter & Gamble yesterday. You can go back and look at the video yesterday. It's posted. The stock wasn't at the profit target at 230, right? It's the reality is this is very simple, and there's not a lot of decisions to be made, and I want to speak to that a little bit here this morning, as some really good questions have come in, and I want to go out and take a look at some of the data and some of the stats here with you. As traders, it's really easy to kind of take a chart, like Procter and Gamble here, and to say, okay, you know what, it's doing what it's doing, and it is moving how it's moving. And bear with, sorry, okay, there we go. All right. But it's very easy to kind of look and say, oh, yeah, this was a nice trend, right? This was a really nice trend. This was a really nice trend. This was a really nice trend. Man, I wish I was involved in those. But then you go and you get into a position, right? And you have a position on something. And you get into it, and the next day, stock dips. And it's down, and you're wondering the whole day, what do I do? What do I do? What do I do? Well, what do I do? The next day it gaps up and rallies. The next day it rallies, hits this top, and starts to pull back. And what's the mindset? The mindset is, man, I knew the top was there. I should have just taken it, right? We always knew the top was in after it's in, and we didn't get it, right? And so that's the mindset. And then the next day the stock gaps down, and it's like, oh, man. Man, I knew that top was in yesterday. I didn't take it. I didn't take it to the close. Now it's a gap down. Man, I wish I could just rewind time. And then the next day, the stock gaps down. It feels a little worse. And the next day, finally you say, this isn't going anywhere. I'm out. I'm done. Leave me alone and go. And, people kick it off their watch list and say, man, forget about it. And then 2 weeks later, it's up $5, and they go, whoa, I missed that. Man, what was I thinking? Right? Well, you're looking for a trend, looking for a 2, 3, 4 week trend. And while all the analysis you do and all the analysis a trader does to find that trend is correct and happening, once the trade is on, the focus changes completely. The focus is now, oh man, I want to get the high of the day or the low, I don't want to be involved in the next little dip and, oh man, I should do this. What if I do that? And it's constant watching. It's constant wondering. It's constant decision making. Even though, you're not making a different decision, every 5 minutes, do I buy or sell? That subconsciously is going through the mind. And this is something that all traders deal with and all traders go through. And some to a much greater degree than others, and it's maddening. It's absolutely maddening. When you're day trading, yeah, those things are, yes, you're looking at it that way. When you're looking for a trend trade, that type of mentality, yeah, one day you'll be right, one day you'll be wrong, right? Here's Procter & Gamble today, gap down, maybe I should take it, right? Well, you know what? It's got a similar principle to the day right after I got in. It gapped on down. Should I get out then? Well, of course not, because we're a few days later, and it's now, now there's a gain to now worry about, right? And we can now see the gain. So now the same question comes, oh man, should I get out, right? Well, if we could fast forward 3-4 days and it's up at 110, are you worried about it today? No, right? And so it's just one of those where, riding trends looks easy. Riding trends sounds easy. Most traders really struggle with it. Why? Because they see the gain and loss, right? They see the gain and loss. They want this high or low, right? Here's FedEx. I mean, I thought I did pretty good. I ran the trend here. Personally, I ran it. I talked about shorting it right here. I got it short, and, first couple days it did nothing. It just kind of bleh. I was able to short it back here and then took off my weeklies, had my monthlies, added to them, and then was able to run it, and I took it off right here. Next day, gap on down. Oh, man, right? Well, why did it take it off? I mean, that was dumb. The next day, it gapped on down big. I took it off for the same reason that I took off other things. It hit my areas, and I said, okay, enough's enough. I'll look for another entry point. But the next day it gapped down, so naturally, what's the feeling? Oh, man, I should have held it, right? Really? Should you have? All right. So, I want to speak to that mentality here because it's something that all traders go through. And it is something that as the trade algorithm has been built for the challenge, it is something that has been absolutely taken away. The importance of only 2 times a day to make a decision is huge. And it was one of the hardest things to get into the challenge. And I'm still not convinced from the data that I have the exact perfect 2 times. I think we could adjust and go 15 minutes later in the morning, and we could actually go 15 minutes later in the afternoon, and we'd be in a little more ideal scenario. But, I don't have data to reflect that here just yet. So it's one of those where, to me, that's one of the most important things. So it takes away a lot of that angst, a lot of this kind of top picker, bottom picker mentality. Because the way the algorithm is built, the algorithm doesn't find bottoms, and it absolutely doesn't pick tops. In fact, of all the trades that have been made, not one has ever gotten out at the top. Not a single one has ever gotten out at the top. It isn't going to happen. The trade algorithm is not built that way. But here's the data. And most of you know this. This is no secret that the algorithm for the challenge is founded upon Katy signals. Right? It is founded upon the signals that we published at TM Signals and published for quite some time. And it's no longer doing it. We've taken it away just simply because it wasn't viable from a financial standpoint to continue to run the site. But the signals and everything else, they still run, still doing all the back testing. The market vibe has been moved, so it's one of those where there's still great value here for us here at Trader Minute with it, but it's not something you can go and sign up for and be part of now. But when we go and we look at the Katy signals, and we're just going to talk about the signals that were published, right? Just the signals that were published, because the challenge signals, they're basically Katy signals with a couple extra layers on them, so a little bit tighter. But of the published signals, in 3 years, there were 616 new signals. That's how many signals came in 3 years. Think about a 3-year market period, a lot of different market environments, right? Of this, the average gain per trade was 2.65% on the stock. And you say, well, okay, we're looking for a trend. That doesn't look all that huge. Yeah. 2.65. Though think about how many average true ranges on these stocks this is. Right? For a stock like Bristol Myers, 2.65%, how many average true ranges is that? 3? And for most of the time over the past 3 years, the average true ranges on stocks have been really small. So for the most part, we're talking about 3 and 4 average true range moves on the stock. For the winners, the average gain was 8.4%. And again, not a single one was exited at the top. Every single one of those had to move down 1 average true range at least to be exited. So to put that in context, take a look at Procter & Gamble. If we come in and we look at the average true range, it's $1.40, $1.44. So in order to exit Procter & Gamble, it has to move back at least $1.44 off of its close from the latest high close. It has to pull back $1.44. That's the way these signals were set up. Now, the algorithm signals are a little tighter than that, but for any of these signals, the gain on the winners, this 8.4%, I mean, what do we know? They all rallied significantly more than that. The average loser, 2.79 loss on losers. That's the data. That's the data that that we see with these signals. Now, the time exit on all of these was 30 days. There wasn't a 5-day or a 3-day. This is just on the published signals, the signals that have been published there on Trader Minute. This is what the challenge is basically working with and what it's looking for. What's my point here? My point is it's looking for the emergence and the riding of trend. It is absolutely not looking for tops or bottoms. There are some out there that are in the sound of my voice. I know you want to look for tops and bottoms. Go for it. Don't let me stop you, right? Don't let me stop you from that. If you have that feeling of, man, you know what? I know I should get out. Get out. Do it. There's always another trade, right? Don't let a challenge, an automated challenge decision, change your mind. But you'll notice that none of these have anything to do with news, right? There's no news element here. There's no analyst element here. There's no gap element here. There is no opinion element here. This is just pure quantitative data with the stocks that that the challenge is running with here today. So I wanted to show that and just kind of make you a little aware of that, as I know it's kind of an adjustment a little bit in mentality, here with it. Tried to do the test to kind of change and kind of shift a little bit of that here and there. But this is much more of the mentality that early challenges were built upon. The challenges that went to 100K, the challenge that went to 49K. The challenge that went to 49K was not me sitting there trying to pick tops and bottoms all day. In fact, if you go back to some of the chat archives during that time period, there were some days where it got pretty nasty, when I made decisions to hold things, and man, I didn't pick the top and things like that. It's just not something that I find to be realistic, and it's not something the challenge needs to be highly successful. Now, we're about a week into the challenge, as it sits right now, with where things were. We're up, $500 on the challenge, so, with 2 trades. So, great, little under the pace I would like to see there with it. But we're also dealing in a market that, since the challenge has started, the market's pretty much the exact same level. We haven't had a trend, really form in the market, and most stocks really haven't been on big trends. They've been on what? They've been on bounces, rips and dips or pops and drops, type of a thing. And I do expect that when we're in a consolidation market, the challenge will have gains, but not to the same degree as in a more trending style market. If we're talking about the market emerging into a trend right here and, deciding to go on a next big move up or a next big move down, we're going to be talking about some really nice gains for the challenge, provided that, the signals come in like they have in the past. So, it's one where flat, I'll expect the challenge to grind higher. But, to get the explosive gains, we do need a little bit of trend. But I don't know how much more, and you'll hear me emphasize it again because, as I see the comments that come in and I see the questions that come in, these trades are not based on my opinion. They're not based on, the exits are not based on what I want, my opinion, my view, my anything. It has nothing to do with it. The challenge is my trading style in terms of the challenge. It's my trading style in terms of the entries. I've taken, a lot of the strategies that I've used historically and, turned them into this kind of quantitative mechanism here, to run with it. And some of that you could say is a little self-preservation, because of all of the, over the course of the years, every time I make a trade, there's always a positive, a negative feedback that comes in about it, and I'm fine with all of that. That happens, but and that isn't going to go away, and I don't expect it to. But I found myself getting into this mode of, oh man, okay, what's it going to do over the next hour? What's it going to do tomorrow? What's it going to do over the next 5 minutes? Right? Which isn't my trading style for challenge trades. And as I went back and I looked at early challenges and I looked at, successful challenges, I noticed that type of mentality wasn't in them. And as later challenges happened, that mentality was a little more prevalent, and I was fighting it. And the algorithm takes that away, and just absolutely takes that away. And I think it's important not only for myself to a small degree, but for the community. To be able to see success, to have success without having to be at the computer all day, every day, without having to sit there and go, I wonder if the top is in, I wonder if the bottom is in, I wonder what this gap means, I wonder what that gap means. There are tendencies in the market, and there are things that we can look at and teach and show and all this other stuff, and the challenge isn't the only way to trade the market, right? There are millions of different ways to approach things, but to take just some of that angst, take some of that, pressure that other people feel, be able to just kind of take all that away and really run it systematically and still see gains, right? A lot of systematic types of things. The problem is you don't see gains. And so, a lot of time, a lot of development has gone into it. And, it's something that I expect to be here for Trader Minute for the next 5, 10, 20 years to come. As the years go by, the algorithm is going to need tweaking from time to time. And in the background, I am going to be constantly testing tweaks to the algorithm. Why? Because market environments change. The market changes. Algorithms in the market, what worked 20 years ago doesn't work today. It's one of those where things, fundamentally shift and fundamentally change. And so that's my job, is to kind of keep that up, keep that, pumping forward here, and then to do the training and teaching as, we've always done here at Trader Minute. So hopefully this helps, just give a little bit more perspective on the automated challenge, on how that works and how that operates, and, kind of the decision-making process when it comes down to it. Thanks for hopping on. Have yourselves a fantastic day. I'll hop on here with you this afternoon. Option expiration today. You're not going to see me give a lot of opinions on stocks today. I'm not going to probably make any real trades today. I might see a thing or two and go day trade a thing or two. But you know how I feel about OPEX. I'm making big decisions on OPEX. It's just just not my cup of tea there. But we're going to see some pinning. We're going to see some pinning out there, and there's some stocks that are in some very interesting pin areas. Bank of America 28.5. Right there. Procter and Gamble 108. Apple can it pin at 190. Right there's some interesting pins out there. In the market today, and that might offer a little bit of play here with them. But as we know, always that the pin action isn't the only driver of stocks out there. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.